All right. Well, I think we can go ahead and get started, so we're not running behind the whole way through here. We're going to try and keep this to an hour, and there's a lot that I want to cover. But thanks everyone for joining us. I've got Victoria here with me as well. So let me have Victoria, if you want to say a few words, kind of get us started, and then we've still got folks coming in, but that's perfectly fine.
Absolutely. Thank you, Paul. Well, hello and welcome, everyone. Thank you guys so much for taking some time out of your Thursday afternoon to join me on the webinar demoing the Impact Dashboard tool. For those I haven't had the pleasure of meeting, my name is Victoria Ross-Frost, and I stepped into the role of Economic Development Specialist here at IMPA back in September. And I'm so incredibly excited to have joined such an awesome team. And I really look forward to working with all of you to promote the economic health and well-being of all the communities you serve. As he already introduced himself, today we're joined by Paul Shuren with Impact Data Source, who's going to walk us through the Impact Dashboard tool, which is really awesome if I say so myself, and show us the number of ways that it can be used by both economic developers and municipal government folk to collect, organize, and analyze project data. So in my previous role, I worked for the Lido over in Hendricks County, and most of my experience with the tool is in the economic impact analysis side of things. So when I had my demo with Paul about a month or so ago, I was really excited to see a couple of additional features being used that I'm sure he'll go into, including a really cool form collection system where you can customize a form, share it with a project lead, and collect all the data and information that you could ever desire. And going back to the economic impact side of things, I know that when I was at Hendricks County, we got a lot of use out of it to show the impact of different attraction and BRE projects on the community. So being able to see the impact of that investment, capital investment on the tax rolls, number of like indirect jobs created, that sort of thing, which is helpful not only for our own internal tracking of data, but also helpful when we were working with projects on the incentive side of things. You know, it's always nice to have some data that you can present to a city or town council to make a case for an incentive or other sort of economic development tool. And also for organizations that have a fundraising aspect to the way they're funded. It's a great way to show the return on investment to your investors for all the great work that you're putting into attracting projects to your community and just promoting overall economic growth. So I'm really excited to have a part in sharing this tool with you all today, and I think that you'll get a lot out of it. I will go ahead and pass the torch on over to Paul. I know he has a lot he wants to get to, but I do believe we're going to save some time at the end for questions, and Paul has shared that he is also more than happy to schedule any follow-up one-on-one demos if anybody wants to dig into the tool a little bit deeper. Thank you all again, and Paul, take it away.
All right, thank you, Victoria. That was great. I appreciate kind of setting the stage here, and yeah, I'm gonna try to show kind of all the aspects of the model. I'm going to start with a few slides here, and as you mentioned, if there are questions along the way, drop them into the chat or the Q&A, and we can definitely get to them at the end. Maybe if I see them coming in, we can answer them as we go too. So. The software is called Impact Dashboard. Everyone through IMPA has access to that. If you don't have an account, just reach out to Victoria and then we can get that set up for you. The software is called Impact Dashboard. The company's name is Impact Data Source. I'm a principal and economist with Impact Data Source. We're based in Austin, Texas. Let's just kind of get a couple screenshots to kind of get our bearings a little bit and just kind of clarify what we mean when we talk about what you can do with Impact Dashboard. So what does Impact Dashboard produce in terms of these impact reports? We're talking about impact reports specifically for economic development. So what's kind of interest there will be a kind of a number of different angles. So one thing you might want to understand is the economic impact of a proposed project. So if we're just looking at this screenshot, if we see it's 50 direct jobs being created, there might be some additional jobs created through, as we're labeling it here, spin-off impacts, but essentially indirect and induced spending in the community. So the supplier impact, and then the workers re-spending money in the economy. And we're capturing things like capital investment and kind of what industry it is, and that's driving all of these economic impacts. Then ultimately, again, for economic development impacts, we want to translate those economic impacts into fiscal impacts. So ultimately, we'll see things like the additional revenues or benefits for a particular, maybe it's a city or a county or school district or whoever, the additional revenue, so those benefits, as well as the additional costs for that local government to provide services to the new business or to the new workers, and then ultimately boil it down to the net benefits. And so we see kind of a graph of what that looks like here projected out over a period of time. And here's kind of a high level summary of those numbers kind of broken out by the different sources of revenue. Now this little screenshot's taken from Texas community. We're going to look at an Indiana community in just a minute. You'll see that, okay, we don't have all of those specific revenues. We've got some different ones that are specific to Indiana. Now, the other thing that you can do with Impact Dashboard is be able to model different types of incentives. So whether it is a different type of tax incentive, or maybe what we kind of in our model call generically a non-tax incentive. So if it's like, for example, an infrastructure grant or some paid for improvements or something like that, you can think of that incentive as an investment in the project. And based on the net benefits that the project will generate, so those additional revenues minus the costs, based on those additional net benefits that the project will generate for you, we can calculate a payback period and a rate of return. So we can say, like, for example, in this case, if we invest $75,000 into this project that's going to generate about $250,000 over 10 years, what's our payback point? And what's our rate of return? And so maybe in this case, we'll have collected enough in net benefits to cover the value of that incentive just 2.5 years into the project. We'll get into the model and actually look at the real thing here. This is just kind of a real high level overview, kind of highlighting what I'm talking about here. For economic developers, there's an interest in kind of a number of different things. So the economic impact, the fiscal impact, and then some sort of incentive analysis to be able to kind of tie that together if incentives are being considered for a particular project. I wanted to touch on this here, and we'll actually look at it in the model in just a moment, to kind of address what data goes into Impact Dashboard. And as we're looking at here, I've got these kind of 6 different boxes. The dark blue ones are things that we're going to be taking care of here as Impact Data Source, as the folks behind the model. We're going to build in details about the tax structure and the tax rates. And we'll also build in local demographic data, so different parameters there, and then all the calculation assumptions, the way that things are going to come together in our model. For your part, for the user, for the economic developer, you're going to be putting in project-specific details, the things you know about the project. So that's things like the jobs, the salaries, the capital investment, what industry we're talking about. And then you can also, you'll have control and be able to enter in the specific incentive options that you might be considering if that applies. And then ultimately, again, we're going to take care of all of that coming together and show you those impact results. So you'll be able to see all the data that we're putting in there. But just be aware that you're not going to have to, the software is going to be kind of essentially preloaded with a lot of the background data that you'll need. The only things that you're going to need to bring to the table, so to speak, are those project specific details and then the incentive details. As we kind of mentioned here, we're kind of hitting on with the software overall, we've spoken a little bit about that analyze portion, but we'll also talk about collecting and organizing and keeping all this information together. So I'm going to jump over to our model right now. So we've got a question already, and we'll kind of go into that in our example with the questions about how do we determine the assessed value to calculate the project taxes, and we'll kind of look exactly at that question. So I'm going to jump into our model right now. We can see, let's make that kind of full screen, I think. So we can see this is I'm in our software, but I'm kind of in all the way as deep as you can go. So I've created a project, I've created a scenario within that project, and now we're looking at some of the results. So we're going to start at the end and then work backwards a little bit. So right here on our reports page, we can see some of those images or similar images to what we just looked at in some of my screenshots. So in this particular project, we can see we've got some economic impacts noted up here. We can see our fiscal impacts generating over, in this case, over 10 years, about $900,000 of net benefits. If I scroll down here, this happens to be for Hendricks County. Again, this is just a made up project, but I indicated that it was in Hendricks County. And if I scroll down, we can see the different sources of revenues that we're generating and costs that we're estimating for this project that are adding up to that 900,000 over the 10 years. We can also see here, in this case, I'm looking at a $400,000 incentive, again, comparing $400,000 to the net benefits that this project generates, the 900,000 there. We can see the payback period is just about 4.9, almost 5 years. And so this is specific to the county. If we were interested, maybe, for example, to see what was going to happen with maybe the school district, we can click over here on this left-hand side and get a different summary report for each one of those jurisdictions. And so again, based on the school's portion of the tax rate, we're going to estimate their tax revenues and other revenues. So this is our summary report, but I'm going to actually step back a moment. And this, I'll point out, the summary report can be printed off or saved as a PDF. You'll use that print button and you can select your destination to save as a PDF, and then that'll just save right to a PDF perfectly for you. This summary report, of course, is a one-pager. We also have a one-page fact sheet report. And so this fact sheet report is going to, you can think of it almost like a cover page. So maybe before you get into the details and the weeds of the actual impact analysis, you might use this fact sheet report to describe what's going on with the project. So in this case, we can see my project is called Vandelay Industries. I've got, this one represents a recruitment project in my advanced manufacturing industry. These are essentially groupings that you can specify and you can create. So maybe you use different terminology, or maybe you don't have a target industry called advanced manufacturing, maybe something else. You can create the different categories that you want and then apply those tags to a particular project. We can see this is the address that they're thinking about locating at. Here's some details on the company. And I've even added some additional text here with some company notes about, maybe I did some due diligence on the background of the company. Over here, we can see some of the details that we've collected about the project. So in this case, we can see their NAICS code, the amount of square feet that they're looking for, what they're planning to do in terms of their facility. They want to purchase land and construct a new building. And here's their timeline. We can also see some of the big impacts. So the number of new jobs being created. In this case, it's 100 jobs phased in over 3 years. We can see the capital investment and then the average salary and the total payroll. I've also added some other text descriptions on this fact sheet to help kind of explain what's going on with this project. And so you can add these descriptions or edit these descriptions just clicking on here and revising those. But this fact sheet, again, is kind of just a one-page summary of an overview of the project. There's really no analysis being done on this page, but if you've collected all the information about the project, you might as well be able to kind of throw it out here on this nice fact sheet report. It can serve as a nice cover page. And then, as I mentioned, here's our summary reports where we get into the actual impact aspects that we talked about. And kind of this is the main point, I should say, of the model of where we're heading with all of this, is trying to estimate what's the economic impact, what's the fiscal impact, how's that relate to the incentive that might be considered. If we click on this last report, so we have this detailed report, this is going to be not a one-pager. It's going to, if you print it out, it might end up to 15 to 20 pages or so. And we have different sections here. So on this left-hand side, we can jump to sections if we want to click on there. But basically, this is a more traditional report with a narrative and a few more detailed tables. So if I scroll down or if I click to jump to these sections, we can see we have our economic impact overview. We're seeing some of that same information that was presented in the one-page summary, but in a little bit more detail. For example, we can see now we have this summary of taxable property over the first 10 years as we've estimated it. In this case, we've got a column for the different types of property. So there's a residential property aspect here. The idea being that if this project is going to create 100 jobs, some of those workers might relocate, some of the people filling the positions might relocate to the community, and that would represent a new household. And some of those new households might even build new residential property. And so we can see some of that going on here in our summary of population impact. There's parameters to control kind of that. If you know, for example, no one's moving to the county for these jobs, you can adjust that. But the other types of property that are listed here, we can see the land, the building, and the FF&E, the equipment. This will come back to the question that kind of came in right away, was about how we get to the assessed value. But this is where we can kind of see the numbers that we're using in the model to calculate our property taxes. We can click into our settings, and we'll talk more about how all of this comes together in just a moment. But on this, getting back to this detailed report, we can see the different sections as I get to the fiscal impact overview. This is showing me the high level, the benefits, the cost of the net benefits for each one of those jurisdictions that we included in the analysis. So here again, Hendricks County, we had seen this on the other page, the 900,000, but now we can see what the other jurisdictions are receiving as well and what that looks like altogether. If I keep scrolling down, we have a public support overview where we can see kind of the total value of the incentive package that's been put together. In this case, it's really just Hendricks County, and again, this is completely made up, but we've modeled a property tax incentive and a $400,000 non-tax incentive. So we kind of put that as a total package of almost $500,000. You can understand if maybe there were some other incentives being offered by other entities, you could plug those in and you'd get them to come through in our total. So if you're trying to share the total value of the package. And now the rest of this report is really just going to go through each one of those jurisdictions in detail. So this was information that we kind of saw on that one-page report, but we were really focusing on the total. Here on the detailed report for Hendricks County, we can see that we have a breakout for the impact or the tax revenue kind of within for the project specifically, or just about those households. And so at the bottom line, we can kind of see majority of that impact is associated with the project itself, as opposed to assumptions about those new households. Again, if I keep scrolling down, we'll have all the information related to Hendricks County with their incentives and anything that they might have been considering. If I keep scrolling, we'll see now we get to the section for Washington Township. And in their case, they didn't have any incentives, so we don't see anything about incentives on that case. And then we get down to the town and so on. There will be a little bit of a methodology section talking about how these numbers were calculated. And then if appropriate, we'll also have an appendix kind of showing some of the details, some of the year-by-year values for, in this case, the property taxes. So we've been here on this reports tab this whole time, this kind of as deep as we go, where we're generating all of our results. What I'm going to do now is kind of take a step back and say, well, how did we get this information in here? And so we'll click on the scenario info tab, and this is where we put in all of our project specific information. We can see in this case, we've got a couple of tiles up the top, and if I click on those, we can just take a look at what they have in here. Here we have the scenario basics. We're just asking, is this a new business or is it an existing business? We'll try to take an example or take a look at an example in a minute here in the case of an existing business. If it's an existing business, we want to have the option to be able to capture their current level of employment and separate that from the new jobs to be added. So it's kind of that idea of being able to separate the retained activity from the new activity. But right now we're just pretending that or imagining it's a brand new business. We can identify where the project is located. First, you'll select the county, and then you can select the specific tax district area. So like in this case, I've made the selection that it was Hendricks County, and then the specific town in this case. Completely disconnected from this would be the project location. So I can put any address that I want in this address spot. It's just going to put a pin on the map. It's not connected to the selections over here. So you need to be aware, like you can't just plug the address in and hope that this updates, because it's not. I wish it were that sophisticated, but it's not that sophisticated. So you'll still need to be able to select the county and then the tax district area for where the project is located. If we hit next here, we'll have an input for the NAICS code. This is where we can specify what the industry is. You can type in. So if we know, for example, let's say it was warehousing of some sort, we can put general warehousing. We can start typing by the words warehousing, and we can find it based on that search. If you know the specific NAICS code, you could type in the NAICS code. But I'm going to put this back to my rubber product manufacturer. And in this case, we're showing you the multipliers that we're going to use. So we've built in RIMS 2 multipliers from the Bureau of Economic Analysis. And we've got the type 2 employment multiplier here. This is showing 1.6, and this is industry specific and it's region specific. So as we look at this, a 1.6 employment multiplier means that for every direct job that's being created, there's 1.6 total jobs created. And so that would be the one direct job plus 0.6 spin-off jobs. If I close this for just a moment, we can kind of see that in action. We've got 100 direct jobs. I've made the math easy for us. And then we have 63 spinoffs. So 100 direct jobs, 63 spinoffs, so a total of 163. And that's our multiplier at work there. If you don't want to use the multiplier, you can uncheck this box and you'll just remove all of those spin-off impacts. Basically, we set our multiplier to 1 in that case. So this 1 times 100 is still going to be 100. And so we can see now we're just focusing on the direct impacts. I think it's reasonable to include your spin-off benefit from a project, but if you didn't want to, or if you wanted to run a scenario without it, you can do that. So I'm going to check that box back on. Now the inputs are relatively straightforward. What we can see here, I've got input for jobs, and I can see I've put in a total of 100 jobs phased in over 3 years. We're seeing right now, just in this snapshot, a 5-year outlook. If I click this little arrow here, that'll open it up and I could have the jobs created throughout the entire 10-year span. Right now we're looking at a 10-year analysis, but if you wanted to change that, you can make that, maybe 15 years or 20 years, whatever time frame you'd like. You can click up here to the settings. So I'm clicking up here in the upper right-hand corner on this gear icon. And so, for example, if I wanted to change the term of the analysis to maybe 15 years, I can change this input right here. And now everything will recalculate over a 15-year time period. And if I needed to, again, if I click on these little arrows, I'll have access to the full 15-year period for inputs. I'm going to go ahead and switch that back to 10 years, but you can see the concept there. Any of these inputs in the assumptions and settings can be adjusted. You just click back in there on the settings and click Edit Defaults. So that's our jobs. We have an input related to workers relocating. So this is the idea that if there's 100 new jobs being created, some of those positions might be filled by people relocating to the county. And so they would represent brand new households to the county. And then a subset of them might even build new residential property like we talked about. And so here we have a default built in, kind of looking at how likely it is for someone in this county to live and work in the same county. And then, looking at commuting patterns and so forth, we'll come up with an estimate here. If you want to override that, let's say that for this particular project, we're going to be hiring all local folks in our workforce, either people that live in the county already or people that live nearby and they're going to commute in. So they won't necessarily represent a new household, but essentially it's either we're just trying to understand how the population is affected here. So we could zero that out, for example, if that were the case, just by overriding the default and putting in, for example, the 0 there. You could also, if you have more information about a project, maybe the company's relocating from out of the state, they're bringing with them a bunch of workers, then you could maybe increase it if you knew that it was going to be a higher percentage relocating to the area. The next input is around salaries. And here we kind of make it a little bit easier for you. If you know the first value, if we know the salary is, change it up here, we'll put it in $50,000 per year, we'll apply this 2% annual increase all the way down. So this input just automatically escalates it at 2%. Now, if you know that, hey, actually it's going to be 50,000 for the first couple of years, you can overwrite any of these cells and you'll see that it just picks up with the 2% beyond any point that you've typed it in. You could also change the percent if it's not 2%. So that's kind of how this input works. Makes it a little bit easier than having to type in 10 years or 15 years or whatever number of years of values. And next up, we have the capital investment. And so now I'm finally going to get back to the first question that came in. On a capital investment, we're asking for maybe the value of land if we want to include that in the analysis. We don't generally think of that as like a capital investment, but if we want to incorporate the value of the land into the tax calculation, we can put in the land. A lot of times, if the land is already on the tax roll, someone's paying taxes on it, and we're trying to think about the net impact of this project, we'll just disregard the land. But if they really are going to spend $5 million, for example, to build a new building and invest $10 million in new equipment, we can capture that here as I have in year 1. Now, if they're planning like multiple phases, this might occur over multiple years. And again, you can put that in. We've kept it simple and put all of the $15 million capital investment in year 1. Again, $5 million is the cost for them to build the building and $10 million for the furniture, fixtures, and equipment. Now, what I'm going to do here to kind of show you how we kind of come together with the assessed value. If we go over to our reports, we had that detailed table where we were looking at the value of the taxable property over the first 10 years. So now we have this building column, and it comes onto the tax rolls at $5 million, and then it increases in value over time. We can see that increasing slightly. The FF&E, it comes onto the tax rolls at 10 million, and then it decreases in value. So what's going on here, we have some parameters, and I'll show you where those are in just a second, where we have an assumption about real property appreciation, and this is going to apply if you had put anything in for the land as well as the building, that value will increase over time by a certain percentage. In this case, we have a 2% default real property appreciation assumption in here. For the FF&E, for that kind of business, personal, or tangible property, we've got the assumption that that property will depreciate in value over time, and there's a depreciation schedule built in there. And you can see, again, the initial investment was 10 million, and then over time, we're saying that declines by about 10% per year, down to a salvage value of 20% in years 9 and 10. So that's kind of how it's coming through right now. If that's not really what's going to happen in the real world, like let's say they're going to spend $5 million, but it's only going to come onto the tax rolls for $4 million. Because they have to spend 5 million, but it really doesn't come on dollar for dollar, right? So maybe we want to make that change, and maybe we want to say that it's not going to increase over time. We just want to have $4 million of taxable value. But again, keep in mind, we want to capture that they really spent the 5 million. And then, for example, on the FF&E, if you know that there's a specific depreciation schedule associated with that type of property, we can get more fine-tuned around our depreciation schedule. So what I'm going to do here is click up in our settings, this little gear icon in the upper right-hand corner again. And on our general assumptions tab right here, we can see some of the inputs that we want to adjust. So for example, the percent of building and improvement costs that represent market value, we can change that. Let's just say in our case, if it's, they're investing 5 million, but it's only going to come onto the tax rolls for 4, let's put in 80% there. Now we also have this commercial and industrial real property appreciation percent, which showing us as 2% right now. I can adjust that, I'll put it at 0. And so we can see as I make changes to these, I'm keeping track of the default value that you've overwritten, just so that you're aware of, hey, these are the ones I've kind of tweaked in my model. If you in your community want to have different defaults in there as a starting point, maybe you want to say that it's always 80% in this spot. Let me know and I can change your defaults for you. Now the depreciation schedule, we talked about that as well. This is the depreciation schedule that we're applying to the investment, to the furniture, fixtures, and equipment. And we can see here's that 100% in year 1, 90% in year 2, and so on. So based on the year of the life of the property, we're going to have this depreciation schedule applied. Now you can change this if you want to. I'm not going to change it, but if you did, you'd see the changes happen in the model. So if we just focus on the building, we can go back to our report. And now we can see that we have a $4 million building in terms of taxable value, and it doesn't increase at all over time. So that's how you can kind of adjust those assessed values or taxable values based on as it comes together. So we have the capital investment, and then it translates into that taxable value with the parameters that we just looked at. That's capital investment. If we look at some of our other inputs, we've got kind of a direct input here, so to speak, for if there are going to be any building permits and fees paid to the county, for example. We also have an input now for hotel nights, kind of capturing some visitor spending. In this case, I think we're going to pick up a little bit of innkeeper's tax, so to speak. The last two inputs on this scenario info page are going to be a place where you can put in a description. This description, as it kind of warns you here, will be shown in the project fact sheet and on the detailed report. So if you're trying not to say the name of the company, or if there's some other confidential information you don't want to get into, you can be careful to not say that information here. Now, if you do have some internal notes that you wanted to keep that are not intended to end up on any of the reports, you can put that here in internal notes. The only way to see the internal notes would be to be logged in and looking at this page. So that is everything here on the scenario info page. On the right-hand side, what's happening, and you can see it's been kind of static because I haven't really changed much, but we can see we're getting a snapshot of our results for each of the jurisdictions. So if we wanted to click here, we could see what's happening for the township or the city or whatever. We can also click here on this little table icon and get the actual values, the table values over the 10-year period. The graph is kind of nice sometimes to get the dynamics of it, but you can also get that other table view. Now, we haven't looked at this yet, but the public support tab is where you can configure your incentives. I'll just kind of go through here and we'll click on the tabs on the left-hand side. So if it was the county that was considering incentive, we would want to click on the county tab here, and then we can plug in a specific property tax abatement, for example. Now, I've just made up this example of maybe that the county was going to offer 100% real property tax abatement for the first 5 years. So I put in 100% down the center column for the amount of property tax to be abated on the building. And then over here, we can see the analysis of those taxes. So the dark blue bars in this graph are showing us the actual property taxes that we're estimating. So based on the property that's being added by the company and the county's portion of the local tax rate, we can see that we're estimating these dark blue bars all the way down here. And now this kind of depreciates. You can kind of see that's the depreciation at work. We're kind of declining in value, and that's because we've incorporated that into our estimates. But in total, over the 10 years, we're expecting the county to get about $290,000 in property taxes. But if we offer this property tax abatement, we can see that we've calculated here for each of the 5 years about $12,000. So in total, our property tax abated, the abatement value is about $60,000. That's the amount of tax that they won't have to pay.
Hey, Paul, quick
Yeah,
question.
sure.
I know we have a question in the chat from Cheryl Morphew about the impact of a project being located in Tiff and how that really plays out into the various taxing units. Is there a way to indicate that in this part of the process?
Yeah. So remind me does everyone participate? Do all of the taxing jurisdictions participate in the TIF, or is it dependent on the specific TIF?
I believe it's dependent on the specific TIF.
Okay.
But that could be incorrect.
Okay. Let's for right now, let's forget about the abatement thing, right? We're going to get rid of, I'm going to uncheck this box and it's just going to remove our abatement here. And I don't know why that didn't, but there we go. If we want to implement a TIF, we can do that by clicking on our settings. So again, up here in our upper right-hand corner, we're going to click on the gear icon. And over here, the last district is a TIF district. Okay, so we've got different settings for each one of the jurisdictions. So like, for example, if I wanted to see what the county property tax rate that we were using, for example, we can see some of these assumptions and settings here. But the one that we want to go to for this purpose is this TIF district. And then we have a checkbox to indicate that the project is located in a TIF district. I'm going to make up a little bit of this because I'm not 100% sure how it works specifically in Indiana every time. I know, so for example, in Wisconsin, when they do a TIF, or a tax increment district, as they call it, a TID, it'll be 100% of the taxes, of the incremental taxes, are contributed to the TID for all of the jurisdictions. So basically, we're taking all the property tax and it goes to this TID district in Wisconsin. I will tell you, in Texas, I know they can set up TIFs with a lot more flexibility, where it might only be 50% of the building taxes, and the city and the county are going to participate, right? So let's just imagine, and if someone wants to tell me how it works, or give me a specific example, we can do that. But we're looking at this table to be able to specify what revenues the TIF district will receive. And so this is the portion of incremental taxes contributed to the TIF by each of the taxing jurisdictions. So if I say that it's going to be let's just do 100% of the county taxes. Let's just do, I guess, all of them. Let's just do those three, and then we'll get the idea. So it's going to be 100% of the building taxes for the county, the township, and the city. They're going to contribute that to the TIF district. And we can rename this. So if we have a specific, oftentimes if it's TIF number 1 or something like that, you can name these things whatever you'd like, and then you can save the TIF distribution or TIF district specifications for future use. So later on, if you're working on another project, you can pull it up and use this exact specification and do something like that. We can also indicate the term for which the TIF district will apply. So if sometimes if the TIF runs for 20 years, but you're already at year 15, maybe it only lasts another 5 years. So you might want to have the TIF roll off or end during the term of your analysis. But for our purposes here, we've created this TIF district, and they're going to receive some of the incremental property tax revenues from these 3 districts. If I go to our reports now, we're going to see the easiest way to see it is right here on our fiscal impact overview. What happens is we add a new entity. In this case, it's TIF number 1, because we've called it TIF number 1. And we can see the revenues that entity will receive. Okay, TID district. Oh, okay, thanks, Jim. So TIF number 1, we can see the revenues that they're going to be receiving from the way that this project plays out. What's happening here is that we're pulling money out of, or we're diverting some of those taxes from the county, the township, and the town in this case, and they're being contributed to the TIF. So if I scroll down, what I'm going to see for Hendricks County, they're going to tell me, this little asterisk is going to tell me that they're not getting any real property taxes because it's all being contributed to the TIF district. So here's 121,000 that the county is contributing to the TIF. If I keep scrolling, we're going to see something similar for the township. They're also contributing 100%, which means they're left with zero. And that's going to be 100, in this case, 155,000 that's getting contributed to the TIF. And then the town or the city entity, municipality, and they're also contributing, in this case, 151,000. So if we get down here to the TIF, we can see the amount of revenue that each of those districts contributed to the TIF, and then what that TIF receives in total. Now, we can look at, maybe we want to see a summary report where we incorporate that TIF. Maybe we want, so what we can do on this summary report is to configure which jurisdictions are included. So for example, if we wanted to include the county, the township, the town, and the TIF district, we can do that. I'll remove, for our purposes, the school, the library, the waste district, and I'll add this TIF number 1. And so now we would see what we're kind of looking at here, this total for the Hendricks County, that's the 121 that's being contributed to the TIF. We've pulled that out of our real property taxes. And in this case, we've pulled out 155,000. And in the town's case, we've pulled out 150,000. So basically, by indicating the amount of the incremental taxes for each one of those jurisdictions that will get contributed to the TIF, it'll be pulled out of that entity and it'll be allocated then and put into the TIF. And so we'll see that this total amount that was contributed to the TIF is equal to the amount that the TIF is going to receive there. So the way you think about this total hasn't changed. We've just distributed, some of those property taxes over here to this other entity. If the TIF will offer an incentive or maybe give back some of those incentives, some of that tax revenue, you can model that here. For example, if you wanted, if you were going to put back, say, 50% of the tax revenue that the TIF received and kind of give that back as an incentive for the project, you'd be able to do that sort of thing here in the on the public support tab under the TIF. If there's a more specific question, or maybe we don't do that with TIFs, or what, you can jump in and ask a follow-up question, or feel free to do so. But that's the general idea in terms to implement a TIF in the model. You'll click on settings, you'll go to TIF district, you'll check the box here to say that the project is located in a TIF district, and then you'll specify kind of how much of the incremental taxes are contributed to the TIF entity. If you have a specific project that you're working on and you have details about the TIF that is to be constructed or that already exists, and you want help working through this, send me an email directly, and we can kind of go through it, and I'll work with you on kind of one-on-one. My email is just paul@impactdatasource.com. You can find it pretty easy. But that's the way that you would implement that TIF district in this model. One thing that I did not show, but I want to do real quick before we jump over to a few other things, was this like $400,000 incentive. As we're thinking about a $400,000 cash out of pocket or some sort of out of pocket value against this project net benefits, we can look at this $400,000 a couple different ways. So if I click on the public support, and this is the county that's offering that incentive, and I'm going to scroll down to our non-tax incentive for the county, there I've plugged in $400,000 to be paid in year 1. Now, I could do this differently. So for example, maybe we get in here and we say, oh man, 4.9 years, that payback period is way too long. We need, in order to get this approved, it needs to be a 3-year payback period. So what you can do with our model is just specify the incentive approach, and maybe you want to specify the payback period. So in this case, maybe you'll select a 3-year payback period. And now the model will calculate, if we fix this at a 3-year payback period, what's the total value of the incentive that we can offer? So you can really specify any one of these criteria that you can see across the top, and the model will calculate the others. So in this case, a 3-year payback period is about a $234,000 incentive. If you wanted to do incentive per job, maybe you do $3,500 per job. That's going to get paid out based on the hiring schedule. So we see the total incentive being $350,000, but the amount paid each year in this case is tied to when those jobs will come on. And so in that case, it's a 4.3-year payback period. And so as you make those changes, they'll come through on your report. Now, just be aware, the other thing here is that maybe if the city was offering some sort of incentive, we would compare the city incentives to the city's net benefits. So if they were going to offer, let's say they were going to offer $350,000, that is going to be a long payback period. So we can see what's happening here. The net benefits are reaching up to about 187,000 over 10 years, and they're actually kind of leveling off. And so it's going to take a long time till we hit that payback point between those two things if we actually offered 350,000. So, you know, again, the incentive that's being compared will be compared to what that entity will actually receive, so to speak. Okay, so we've been in here in this one analysis. We're on, the project's name is Vandelay Industries. The scenario name is scenario 1 with client data. So the project name is getting printed on all these reports. The scenario name is getting printed here as well. If I want to kind of see a little bit more of the software, we can close out of this. So I'm going to close our scenario here, and we're going to go into our project control center. So this is Vandelay Industries, the control center, and we see all of the information we've collected about this project. And so here we see that I only have one scenario. This is that one that we were just looking at, scenario 1 with client data. We can see I've got this little eyeball preview thing on it, and that's showing me the results over here are specific to that scenario. We can rename this scenario if we wanted to. We can call it today's date or whatever we want to do. We can copy this scenario. So if we wanted to, we can click copy, and the model will make a copy of that scenario. So you don't need to go, if you wanted to do another iteration off of that scenario, you don't need to re-enter everything. You can just hit the copy button. We can see on this, we've got a snapshot of the results for that particular scenario. We can see we have some other information here. We have a data form that we've collected. We're going to talk about that in just a moment. We can also see we've identified the project type and the industry here in this case. So if I uncheck that, we can select from a drop down. This is where you can put in your specific project types if you want to keep things, you know, labeled a certain way. You can go into your settings, essentially your account customizations, and make changes to those different industries or categories. So like, for example, I can see those are my choices. If I go into my account, I would be able to make adjustments to that. And that's kind of detailed out here for you as well. You'd be able to jump straight to it. I do have the ability to upload documents if I want to attach any documents to keep things organized with this project. Now, in this case, this particular project was created from a data form. So the workflow here in this particular case was I sent the data form to a prospect, the prospect filled out the data form, and then I created the impact analysis using the information that was submitted by the prospect. If I want to see what does that data look like when someone submits data to me, I can click on this, and this will show me the kind of the format of a submitted data form. So this is the information that I get back. So we kind of summarize it in this bullet point summary here, where kind of their selections are in bold, which helps us kind of see everything that they submitted. If I scroll down that summary, you know, after we get past that summary, we'll see every single input that they specified as they filled out the data form. So this is, again, kind of looking at the built-in data form that we sent to the prospect. They filled it out, and then these are the results. We're going to talk about how this gets completed or how this looks for you on your side. But that is just one way to get data into the model. If you have, let's say that you have a data form where you currently, or some sort of application where you collect information from prospects to get the understanding about what they're doing, and you collect, you know, jobs, salaries, capital investment. If you have that in some other format, you can just come in here, click create a new scenario, and type the information in directly, kind of as we've looked at it here. The alternative method, like I mentioned, is to use our built-in data form, where the prospect will fill out the data form, send it to you electronically. With a click of a button, you'll paste it in here and have your impact analysis started for you. So I'm going to show you how that kind of comes together. So we're looking at this one for Vandelay Industries. I'm going to take one more step back. So this is, we were looking at a specific scenario. Here's all the scenarios for our specific project. If I go back, I'm going to look at all of my active projects. So here's Vandelay Industries, my one scenario. It's a recruitment in our advanced manufacturing industry. Here's another project that I've worked on, Project Zip. It's a recruitment in our distribution and logistics. That one I've run through 5 different scenarios. So just to kind of show you what that looks like, if I click on this tile, This is showing me all the different scenarios that I've run for this particular project. And if I click on these little preview icons, we can see the different scenarios as I've kind of gone through things. But again, going back to my active list, we've got a bunch of different projects here. We can click on the different categories and we can see I have one project that I've selected as that I've won, one project that I lost, and a couple in the archive, so to speak. If you want to take an active project and put it in one of those categories, you can change the status here for your projects that you won or lost or that you want to archive. If you want to create a brand new project, obviously we'll just click on that big create a new project. We'll give it a name. Okay, so on this left-hand side, this is where we've been kind of getting around. When you first log in, we'll go to our insights page. This gives us kind of all of the details about our projects, showing us our active, won, lost, and archived. Within our 7 active projects, we can see that we've got, for example, like 3 newer startup projects, different industries here, and we can jump straight into recent projects that we've worked on. So we could jump back into that Vandelay Industries project, for example. On the right-hand side, this is where we can see some information about our data forms. And so first up, we have an inbox. Right now, it's telling me that I don't have any new data forms in the inbox. We can see we have 1 data form in progress. And then I have a quick link to jump to my 2 data form templates. So the way to use the whole data form feature here would be to set up a template and then share that template with your prospects. So I can get to my templates here, or on this left-hand side, we can see we have an area for data forms, inbox, and templates. If I click templates, this is the area where you can configure your own custom data form. So you can choose maybe the name that you want to call it, if you want to call it an incentive application, or if you want to call it a project data form. And you want to select who the point of contact is within your organization, who should be that point of contact. And you can also select what questions you want to include in that data form. So I'm going to click here and I'm going to be able to configure my data form. So in this case, just to show you a few inputs, and then we'll take a look at what this actually looks like for the prospect that's filling it out. You can see I've called this one Economic Development Project Application. I can see that the kind of the point of contact, if someone needs help as they're filling it out, would be this user. This is me. I have a welcome message that I kind of put on that initial screen. And then if I scroll down just briefly, we can see I have a bunch of check boxes. And I can select, and in this case, I have them all checked on, meaning I'm going to show every possible question. But if you want to go back through here and kind of trim this down and say, I don't care about certain, maybe I don't want to ask about the benefits that are offered, I can uncheck some of these boxes, right? But let's just show you what it looks like if you were to share this with a prospect. And again, we have 2 different ways to share it with a prospect, kind of just one-to-one via email, or we can get a URL and post that URL on our website. So anybody who clicks on the link on your website, for example, will get a new iteration of the data form. So I'm going to click preview, and then I'm going to click on preview wizard. And this takes us to kind of this preview session of our data form. When the prospect clicks a link to fill out your data form, you're going to go to a welcome screen. This has my kind of logo here. This is Economic Development Corporation. It's my generic ED Corporation logo. This is my welcome message that I can configure on that previous screen we were just looking at. And this is the point of contact that I've selected for this data form. If they get started, they're going to be asked for 3 pieces of information. We want to know what their name is, what their email address is, and kind of what their role is with the company. And just to be aware, on this data form, the only required fields are these 3 fields. So as they get into it, they'll be able to leave certain fields blank, but they will not be able to get past this screen if they don't put anything in. In the case of a preview, we actually don't need to put those in, but a real user will have to fill in something. Next up, we will be asking them if this is a new project or an existing, a new business or an existing business. The distinction here is going to be whether or not we want to ask about the retained aspects to it. So the number of existing jobs and the existing value of their property and so forth. Just for our instances here, I'm going to say, yes, it's an existing business so we can see what that looks like. Now we go into our kind of data form wizard. And on this left-hand side, we can see the kind of the process that we're going to go through. We want to ask them about their current operations. We want to ask them about their expansion if it applies. We're going to give them the opportunity to provide some supporting details. We're going to get details on the company behind the project, and then we're going to let them review it. And so up here first, we can see we want to know about the company's current operations in the community to distinguish it from possible expansion plans. So we really just want to keep all of these first few inputs related to the current operations. So we're asking about their current site, whether they own or they lease or do something else. If they hit next, they'll go and they'll be able to tell us about how much space they currently occupy. they'll tell us, what they produce or what their NAICS code is. Again, you have the ability to kind of turn some of these on or off if maybe you don't care about square footage or something like that. We have an input for the number of existing jobs, that's that retained jobs, and the salaries that those workers earn. We can also ask about the current value of the market value of their property that they currently support, and if they have, if they support hotel nights. Next up, we'll confirm that yes, there's an expansion plan. If that's the case, we're going to go through a whole section on the expansion. What are they planning to do in terms of, are they going to build something? Are they going to lease something? What are they doing? We're going to ask for their timeline of when they might break ground, when they would begin operations. We want to know about the site, if they have a specific address in mind. What's the incremental square footage that they're going to add? What are they actually doing at this expansion? So in general, we'll kind of pre-fill the industry that they told us for the current operations, but very often it could be, a manufacturer, and they're also going to bring their headquarters. So maybe there's two different activities there. If we want to ask about the number of new jobs added, we've got inputs for that, the salaries. We can also ask for jobs and salaries in a slightly different way. This is like that other way where you might ask, what positions are you hiring, how many of those positions, and what the average salary for each of those. And then we'll calculate kind of that overall average salary across their total workforce. We've got input for benefits and so forth. You can kind of see all these sections here. I'm going to skip a few. Then we get to supporting details where you can provide a custom prompt. So this is the text that I just highlighted there is something that you can configure in the data form, and you can ask them a specific question. So maybe you just want to say, hey, provide additional background, or maybe tell me what incentive are you applying for, or whatever text you want to ask them here, you can change that when you configure the data form, and they'll have a response. They can have a response here. We also have a spot where we can attach documents or ask them to upload documents. So you might ask them, you might change this prompt and ask them to upload a site plan or hiring schedule. I'm just looking at a question here. Can the data form be embedded on an existing landing page? And can you make the data form password protected? I'll answer the second one first. So can you make the data form password protected? The answer is no, it will not. It's not password protected at this time. Basically, they're going to get a very long custom URL that they can get. As they fill it out, they're going to get, we'll email them a link to get back to their data form, and that's kind of the secret way that they're going to get back in. It's not password protected though. And then can the data form be embedded on an existing landing page? I'm not 100% sure. I'm fairly certain you could probably put this in like an iframe, but we would need to kind of maybe talk to your web folks and our developers to make sure that that was going to work. I can say that none of our clients are currently embedding it, but it just really hasn't come up yet as a question there. So we can ask for some supporting details, whether it's text or they can upload documents here. And finally, as we're kind of finishing up, we're going to ask for their company information so they can tell us who the company is, kind of some background on it, when they were established, where they were established, their business structure and so forth. We have an employment distribution, trying to understand how many workers they have in the state, in the US and worldwide. And then finalize, kind of get that point of contact if we have more questions. And then before they submit the data form, we're going to repeat back everything that they've just told us. And so they can kind of confirm that maybe they understood all the questions. And so they're going to see all the information they just submitted here, kind of on one nice bullet point summary. And then if everything looks good, they can hit submit and send. And then they're going to be warned like, hey, once you send this, you're not going to be able to make any more changes, which is a good thing because we want to think of this as like the PDF version, so to speak, of the data form that they're going to send you, so they can't go change things on you without you knowing. So when you hit submit, they're going to be taken to essentially a read-only version of their data form, so they'll still be able to see everything that they submitted, but they won't be able to make any more changes at that point. If they do need to make changes, they can contact you, and you'll be able to make changes within the analysis, but you wouldn't be changing that original data form that was submitted. So I'm going to get out of this preview. We're going to jump back. And see, this is that configure screen. These are all the kind of settings that you have in control. So if you don't want to, like I mentioned, ask all the questions, you don't need to. You can change your custom prompts for the additional background or for the attaching documents, all the different things here. So this is how you can kind of really configure that. Now, as I mentioned, in order to share this, you'll click on this share button, You have two different ways. One way would be to email it to someone. So you're working with a prospect, you have their email address. You can just put in their email address here. You can change the subject, change the message, change who it's coming from if you wanted to, if you have multiple people in your organization. You can select that signature there. And then when you hit send, what it's going to do, it's going to include the URL for them to be able to fill out the data form, their custom data form. That's one way. Again, if you're one-to-one, so to speak, if you know who you're working with. If you just want to grab the URL, that's going to create a new data form every time someone clicks on it. You can grab this URL here, this link, and that can be, the link behind the button on your website where you say, send me your data. Okay, this was a ton of information. I've got a few more things I want to show on the data form. There's been a couple questions that I've addressed kind of as we went along. If there are other questions, feel free to type those in now. I can stay a little past the top of the hour, but I know we're about 5 minutes from the top of the hour. So getting back to what happens when you receive a data form, we have this data form inbox. Right now, I don't have any of my data forms. So no one has submitted a data form, but if I had received one, number one, I would be notified. So you're going to get an email from Impact Dashboard. And when someone submits a data form, you'll get notified that a certain person, they'll put the email address of the point of contact there, has submitted data form, log into Impact Dashboard to see what they submitted. And so you'll get notified and you'll be able to come click straight in here and you'll see a data form listed here. So essentially it'll be like kind of like an inbox. If you are curious and want to see, who's started the data form and how far they've gotten and what have they filled out, you can actually kind of snoop on folks and you can see your data forms that are in progress. So for example, I can see this on my in progress list. I can see someone started the data form this morning at 10:30 and they're only about 27% complete. I can click on this. So the cool thing is if I click on this, I'll be able to see what this person has submitted so far. So they started filling out some information. I can see they haven't gotten very far. Maybe they call up and they say, hey, I have questions about a particular input. You can jump in here, you can log into your app, pull up the in progress, and you can see exactly what they filled out so far and be able to talk through the data form with them. You could also come in here, for example, if it's been maybe a week and they haven't made any more progress, and you just want to check in with them, you can share this data form back with them. So you can send an email to this contact, whoever had started the data form. You can send them an email and say, hey, I saw you started the data form, but you haven't fully hit submit. Do you have any questions, right? And so you hit send there, or you can just go grab the very specific URL for that data form and help them get back in, for example, if they lost access to it for some reason. If this is just bad data altogether, obviously you can also delete it. We'll also keep a list of all the assigned data forms that you've received and then assigned to projects. So if you remember, we had created my Vandelay Industries project using a data form that was submitted. And so in this case, we can see this is the data form and this is the project it's been assigned to, and I can click go to project here. And so when you get one, I don't really have a way to show it right now, but when you receive a data form in your inbox, you'll have the ability to essentially assign it to a new project, assign it to an existing project. And then in that process, you'll also create a scenario with that data. So if I wanted to kind of start from scratch, I could use this button here to create a new scenario inside my Vandelay Industries project using the client data. So in this case, you can see I've clicked that button, and now this is going to let me begin a new scenario with that data. I guess one thing I can do, I know we're right at the time, I don't see any more questions coming in, but I do want to show, for example, an expansion project. So let me do that one on this one real quick. Let me put in Hendrix, and we can leave it, well, let's put it back in the same, I think it's, there we go. And we'll leave that, we'll close that out. Okay, so when you indicate that a project is an expansion, when it's an existing business and it has an expansion, we're going to get this extra input here in a scenario. We just saw in the data form, there's a whole series of other questions that last, but within a scenario, this is what it looks like when you say it's an existing company. And you can put in the market value. Maybe they have a building that's worth $3.5 million or something like that. And they have 50 employees. Maybe they make $70,000 a year. And so when you do that, we can keep everything separate here. So if you remember, we had 100 new jobs and we had 50 existing jobs. Right now, we're seeing our results are still only reflecting the 100 new jobs. And that's because we have this toggle up here that allows us to select how we want to analyze the project. So in this case, we're saying we only want to analyze the expansion only. The alternative way would be to say we want to see the total combined value of this project, where we get all the benefit of the existing activity and we add that to the expansion activity. So I'm going to click total combined, and we're going to see everything kind of update here. So now we're talking about 150 total jobs. The net benefits have increased because we're picking up benefit from the income taxes that might be paid by the existing workers and the property taxes on the $3.5 million building and so forth. If we go to our reports, we're going to get a slightly different format here, where we'll clarify that the 150 direct jobs include the 150 new, or excuse me, the 100 new and the 50 retained, so to speak. We can also see in our detailed report that we will have a couple of tables to show us the breakout of whether or not some of the impact is associated with the current operations or whether it's associated with the expansion activity. And so, for example, here we can also see for Hendricks County, for example, 1.3 million of net benefits over the next 10 years. About 900,000 is coming from the expansion part, and 350,000 of that is coming from the current operations. So you do have the ability to slice and dice your analysis based on how you think it should be evaluated. So if you wanted to say this is a project that it's all or nothing, either they're going to expand here and we have 150 jobs, or they're going to expand somewhere else and take the 50 existing jobs, then you might say, okay, we want to analyze this as the total combined impact because that's really the full value of this company. That would be the way to do it here with the total combined. If we were to say, well, actually, we only want to look at this because we know that there's no risk of those existing jobs. We want to look at it a little bit more conservatively and just say, what's the value of this expansion? And then we can flip this. And now all the analysis, as we see here, has been flipped back to just look at the incremental impact as opposed to the total combined. And so again, these reports will update. Now it's telling us we're looking at 100 direct jobs. It's clarifying that we're not including any of the benefit or impact from the 50 retained jobs. So that was a real quick kind of final note here on some of the things you can do in these expansion projects, being able to slice and dice the different activities so that you can be sure you're incorporating everything that you want to. I don't see any more questions. I think I'll probably try to wrap it up here. Victoria, if there's anything else that you wanted to say or ask me or anything, again, we'll post a video, post the recording for us out there, make everyone, make the link available to everyone. And then of course, if you have questions, feel free to reach out to me directly. I don't know if I have a slide with my contact information somewhere. Maybe I do.
I'll be sure to pass it along when I send out the recording link as well. Okay, cool.
There it is too. But thanks again for everyone for kind of hanging out for the full hour plus. And again, appreciate any feedback or any specific questions you have on how this applies in Indiana. We can certainly talk through it. Feel free to reach out to me. And thanks again so much for joining us today.
Well, thank you, Paul, for taking the time to walk through the tool. I'm really happy that you got to take some time to walk through the Tiff piece, because I think that that's an incredibly useful tool for a lot of our economic developers, as well as city and town people in county, because Tiff is a tool that's used all the time in the state. So I think that's a really unique aspect that people will get a lot of good value out of. Thank you to everybody else who was able to attend. Like Paul said, I'm going to go ahead and send out a link to the webinar recording, and feel free to share that along with anybody in your organization that you think would find it useful. And if there's anybody else you think would find the tool useful and they don't have an account, feel free to pass along their information to me and I can get them all set up. Like I said, along with that webinar link, I will share Paul's contact information as well. And if you are interested in setting up a individual webinar to kind of dig in a little bit deeper, reach out to me or Paul and we can get something set up. Thank you all again. And if no one else has any questions, I think we'll close it here.
All right. Thanks, everybody.
Thank you all. Have a great rest of your week.